In today's lecture, we'll be looking at maritime transport demand. This would be the chapter outline. We'll first introduce some very basic economic concepts. We'll then look at what are the key factors influencing supply and demand for maritime transport. By putting these two together, supply and demand, it forms the shipping market, and we'll be having a quick look at what does the shipping market model entails. We'll then focus on the key topics that we'll be covering today, which mainly relate to the key factors affecting maritime transport demand. These are the 5 key factors influencing maritime transport demand. At the end of this lesson, you'll be able to explain the shipping market model, which depicts the relationship between demand, supply, and the freight market. Discuss the main factors influencing demand of maritime transport services. Discuss the factors causing the world or business economy to be cyclical in nature. Explain why over long periods the trade growth of individual regions will change. Calculate the ton miles and average haul of a commodity. Discuss factors influencing the average haul of a commodity. Explain why transport costs influence the demand for maritime transport and provide reasons for the steady reduction in transport costs over time. We'll now be learning some very basic economic concepts so that you could better appreciate the topics that we'll be covering today. Here we say that the interaction between the demand and supply of maritime transport services influences shipping cycles. What are shipping cycles? Shipping cycles can be depicted on a two-dimensional plane with the y-axis representing freight rates or price, and the x-axis representing time. As the name suggests, shipping cycle is cyclical in nature rather than linear in nature. Okay, so shipping cycles is always cyclical in nature, and it's cyclical because of the interaction between the demand and supply of maritime transport services. Okay, so we'll just look at demand for today. Demand, if we are to plot it on a two-dimensional plane with the y-axis representing price or freight rates, and the x-axis representing Q, quantity, we'll notice that the demand exhibits a negative relationship or a downward sloping relationship. And that is because at high prices, when prices are high, the quantity demanded will be very low. The quantity demanded will be very low. And if we can reduce the price, the quantity demanded will be very high. For example, and this relationship can be explained by 2 principles. Number 1, we call it the income effect. Okay, income effect. Right. So we could use, let's say, an example here. Let's say your income is $10. Okay, and suppose if I am to sell you a product for $5. Okay, if I'm to sell you a product for $5, the maximum number of products you can buy would be 2. You can only buy 2 products. But what happens if I'm to sell you a product now for $8? Okay, then you will only be able to afford just 1 product. Okay, so the demand exhibits in a downward sloping fashion, and that's because of the income effect mainly. And another reason that we can use to explain why freight and quantity demanded exhibits a negative relationship is because of substitution effect. It's because of substitution effect. Right. So for example, if McDonald's today at NTU is to increase their price, the price of a meal from $5 to $8, what would you do if McDonald's increases its price? Perhaps you might be thinking about trying other type of fast food like KFC, which is selling at a cheaper price than McDonald's. So you'll substitute your consumption, and by substituting, so when prices increase, there will be more substitution away from McDonald's, and that will reduce the quantity demanded for McDonald's. Okay, so these are the general two factors that explains why the demand is negative. Right, so we have talked about demand. Now supply would be the opposite of demand. Right, in that case, it will be upward sloping or upward facing, and the reason is that if you are a seller, naturally the higher the price, you will want to supply more to the market. You want to supply more to the market. So by combining both the supply curve and the demand curve, it will determine the price equilibrium. This will affect the price for today. Let's say today the price of shipping services per container is $200. And if we are to plot it on a graph with P at the y-axis and time on the x-axis, so let's say today is $200. Okay. And let's assume that the next day there has been an increase in demand. And when there's an increase in demand, the demand curve will shift to the right. Okay. And if there is a decrease in demand, the demand curve will shift to the left. So what happens now is that we register an increase in the price, let's say from $200 now to $300 because of a shift in the demand curve. We could plot this $300. So that would be the price for today. Okay, so we can perform this exercise over a long period of time. You will notice that the interaction between supply and demand will cause this kind of cyclical behavior in the shipping cycles. Right? So each twist of the cycle confronts shipping investors with a new opportunity or threat. Okay, so here we are just looking at the shipping cycle in general. Of course, this will influence price. So we can plot the transport cost. Right, let's say transport cost is this. Okay, so of course when prices are high, and are above the transport cost, the shipping company will be earning some kind of profits, as shaded in blue. And shipping company will be making losses if the prices are below their transport cost. Okay, so each twist of the cycle confronts shipping investors with a new opportunity and threat. So here would be opportunities, when prices are above transport costs, and these will be threats. The shipping market is very volatile. In a space of a few months, a ship owner's cash flow can improve tremendously, and the market value of his fleet can change by millions of dollars. So we are saying that this shipping cycle is very volatile. So it could go up really quickly and go down very quickly as well the next day, for example. Okay, so we say that the shipping cycle is very volatile. Okay. We'll skip this point because we're not going to talk about selling and buying of ships. We are mainly focusing on the prices of our services, of our ship services. Okay, so it is important for shipping companies to predict where are the peaks and troughs on the freight market. Okay, so the freight markets, again, it's basically your shipping cycle. So this would be the freight rate over time. Okay, so the peaks refer to the top of the shipping cycle, and the troughs refer to the most bottom of the shipping cycle. Okay, so for us to predict this shipping cycle, we need to understand what are the factors that affect freight rates. Of course, in that case, we need to look at the demand side as well as the supply side. We need to look at what are the factors. If we know what are the factors that affect the demand and supply, we will be able to more or less predict how the shipping cycle will look like the next day, for example. We'll be able to predict. So we'll now look at what are the factors influencing supply and demand. So there are many factors influencing demand and supply for maritime transport services, but here we are only going to look at the main factors. For demand, it will be the world economy, seaborne commodity trades, average haul, random shocks, and transport costs. For supply, it will be world fleet, fleet productivity, shipbuilding production, scrapping and losses, and freight rates. In today's lecture, we'll only be focusing on these 5 factors. We will cover these 5 factors next week or in our next lecture. Alright, so we keep mentioning shipping market or freight market. So what is really a shipping market or a freight market? Okay, they meant the same. So this will be your freight market. The freight market, as mentioned, it will reflect the time versus the price of the shipping services. In this case, it's dollars per ton. Okay, and this will be our focus for today. We'll only be examining the factors influencing demand. There are 5 factors: world economy, seaborne commodity trade, average haul, random shocks, and transport cost. And collectively, they will affect demand for maritime transport services, which is measured by ton miles. Ton miles. Ton represents the weight of the commodity being carried. Miles represents the distance. Okay. So we will cover supply in the next lecture, and by combining both the demand and supply, it forms the freight market, because we are now able to determine what is the price, and it can only be done by combining together both the demand and supply. We'll be able to determine what is the price. We'll skip this section because we will only be able to understand the shipping market model once we have completed both the demand and supply lecture. So this will be the focus of today's lecture. We'll be understanding what are these key factors influencing the demand for maritime transport. So we'll start with the world economy, which comprises both the business cycles as well as the regional development cycles. We say that the world economy generates most of the demand for sea transport through either the import of raw materials for manufacturing industry or for trade of manufactured products. What do we mean by world economy here? World economy is measured by the GDP, the gross domestic product of all the countries. Of course, when the GDP growth is high, it means that the economy is good. Everyone is employed. Everyone is receiving higher amounts of salary. So what happens if we are all wealthy in general? The whole economy is very positive or good. Then people will start to spend more and consume more. And if we consume more, we need to trade more. And if we trade, it means that we need to import more raw materials for production. And we will also need to demand for more maritime transport for trading purpose. Okay, so as you can see in this figure, having a good economy will affect the demand for maritime transport for all of these following commodities. It will affect all of them. So good economy will increase the demand for maritime transport services for all of these commodities. Of course, if the economy is not doing well, then the demand for maritime transport services for all of these commodities will decrease because there are fewer consumptions. So here we say that the business cycle determines the short-term cycles in sea trade. Business cycle here refers, we are trying to plot the world economy measured by GDP growth over time. Right? You'll notice that the business cycle is also cyclical in nature, just like the shipping cycle. They are very much the same. So the business cycle will represent the short-term cycle. So fluctuations in the rates of economic growth influence seaborne trade, creating a cyclical pattern of demand for maritime transport. We say that because the business cycle is cyclical, therefore shipping cycle, time over freight, is also cyclical in nature. When we are at the economic boom, for example, the freight rates will also be very high, and that's because during economic boom there will be more demand for maritime transport. Okay, so let's say this is the baseline. During good economy there will be high demand for maritime transport because there are more people trading. So this will increase the demand. You'll notice that the price would have increased during good economy. And let's say if we are at the recession, everyone is not spending, everyone is saving, the shipping cycle will also be at the bottom, because now that the demand has reduced and the price would have dropped to a bottom at the shipping cycle. So we say that the world economy has a very positive correlation with shipping cycle. So this figure will illustrate the relationship between the world economy and here measured sea trade, which in a way reflects the demand for maritime transport. Right, so you notice that when the world economy is at the highest, the seaborne trade is also at the highest, and when it falls, the seaborne trade is also at the lowest. So we say that there is a very positive correlation between world economy and demand for maritime transport services. We say that the business cycles, your world economy, is cyclical in nature because of a combination of external and internal factors, causing it to be cyclical rather than linear growth. Right. So you see that the business cycle normally it looks like this, right? Cyclical in nature rather than linear. Linear means it's a straight line growth. So what are these external and internal factors? External factors will be events that a shipping company will not be able to have control over the situation. Right? Shipping company has no control over the situation, such as wars. Right? A shipping company will not be able to change the events such as wars or changes in commodity prices. Okay. No way a single company will be able to influence prices. It's determined by the interaction between supply and demand. Internal factors will be the normal course of business, dynamic structure of the world economy. This will be the traditional way of measuring GDP. For example, when it comes to measuring GDP, it can be based on the expenditure approach. How do we measure the GDP of an economy, for example? So if we use the expenditure approach, GDP will measure the total amount of expenses from the government plus total expenses from businesses plus total expenses from consumers and net export. So by adding up all the expenses in a year, we will be able to calculate the GDP of a country. Okay, so internal factors are your government, businesses, consumers, right, plus net export. And these factors can be controlled. We can influence GDP through these dynamic factors. For example, if the economy now is not doing well, government could invest, let's say, $10 billion into the economy, and that will boost the GDP by 10 billion. So we'll now be focusing on the internal factors that causes business cycle to be cyclical in nature. Okay, so if business cycle is cyclical in nature, this is business cycle, then shipping cycle will also be cyclical in nature. So we'll be looking at what are the factors that causes business cycle to exhibit this way rather than in a linear fashion or straight line fashion. So these are the four factors: multiply effect, you might want to cancel this, multiply effect, time lag, stock building, and mass psychology. So it is these factors that causes the world economy to be cyclical in nature. And if the world economy or the business cycle is cyclical in nature, so will be the shipping markets or the shipping cycle. The peaks and troughs produced by the shipping cycles are generally not severe to threaten the survival of well-run businesses. For example, if we look at the shipping cycle, if it's behaving in this fashion, and let's say this is the transport cost, the cost of operating ships, and this is obviously the shipping cycle representing the freight rates. So in the long run, firms or shipping companies will be making even losses. more or less even losses and even profits. So it is what we call the severe cycles, such as random shocks, that will threaten the survival of well-run business. It's not the internal factors, it's mainly the external factors that causes shipping companies to lose a lot of money. As a result, it threatens the survival of long-run business. For example, the COVID-19 pandemic would have caused affect the whole economy, reducing the prices of shipping services. And how would that affect the profits of shipping companies? Let's say this is today. You'll notice that there is a sharp decrease in the freight rates, resulting in huge losses for shipping companies. So it is these random shocks or external factors which fall outside the normal business cycle mechanism that threatens the survival of well-run businesses. Just like in this example here, you'll see that the sharp decline in the, whether it is the shipping cycle or the world economy business cycle, it is this crisis that causes a sharp decline in the prices of freight rates. And these external factors are the ones that threaten the survival of businesses. So we'll now look at the first factor, which is the multiplier effect. Okay. So normally when we invest in something, let's say in road building, it spurs additional expenses. Okay, so if we are to invest in road, we will create new consumer demand from the workers hired. If we need to build roads, we need workers, and if we pay the workers, workers will then spend the money, and this creates more wealth or more GDP. Okay, so how do we measure GDP? If we want to measure GDP, we look into the government expenses, right? GDP for a given year. Government expenses plus business investments plus consumer expenses and net export. Okay, so now let's say if we are to spend $1 billion, $1 billion, this is spent by the government to invest in road. And of course, if we are to invest in road, we need to hire people to build the road. Okay, and these workers will then spend the salary that they have earned from building road on food, for example, or rental. So let's say if they spend all their money, this will create another $1 billion for the year. So you'll notice that in a given year, even though we have only invested $1 billion, the end result is that it results in $2 billion in total. Right? So what will be the multiplier effect? The multiplier effect will be equals to 2 billion divided by 1 billion, which gives us a value of 2. Okay, so we see that there has been a multiplier effect of 2 times the initial investment. The initial investment is 1 billion multiplied by 2, we get 2 billion. Okay. So when the economy is good, okay, what do you think would be the multiplier effect? Of course, for consumers, whether it is government, business, or consumers, they have 2 decisions to make. One, either to spend the money that they received or save the money. Spend or save. Okay, so for every dollar, let's say, that I receive, if I spend all the money, the multiplier effect will be very high. Okay, but if I receive $1, In this case, the multiplier effect is 2. If I receive $1, but I only spend $0.2, right? In that case, the multiplier effect is just 1.2 because I'm saving more, right? So generally, if every parties here spend their money, then the multiplier effect will be very high. Okay, if everyone save, then the multiplier effect will be very low. Okay, so if the multiplier effect is very high, it will create this kind of exponential effect on the world economy or the GDP. And if everyone starts to save, it will create a trickling effect, a negative effect. Okay, so this is because of spending. We are spending more than we are saving, more than save. Okay, and for this region here, we are saving more than spending, and this will cause the multiplier effect to be very small, very low, and in this region the multiplier effect will be very high, and it is this multiplier effect that is causing the business cycle to be cyclical in nature. Okay, so that's our first explanation. Right, so we'll ignore this part here. We just need to understand the principle of multiplier effect. Okay, so the second reason to explain why business cycle is cyclical is time lag. Okay. Time lag refers to the delays between economic decisions and their implementation, and this makes the business cycle very cyclical in nature. All right, so we take a look at the freight market, for example, or the shipping cycle. During economic boom, when the prices are very high or freight rates are very high, the ship owners will want to order ships because now there are a lot of demand for maritime transport, and as a ship owner or shipping company, you want to supply more to the market to make more money. So what they will do is to order ships, because order ships will increase the supply, and then with more capacities they will be able to earn more profits. Okay. However, there is a time lag involved. There is some kind of delays, because ordering ships, if you are to build ships, it takes 2 to 3 years to complete building a ship. It's not like you order today, you'll get the ship the next day. It will take a few years to construct the ship, to build the ship. So even though the decision is made here at the economic boom, the actual delivery of the ship might be at the bottom during the recession. Right? It's delivered when the market has already gone into recession. So there's some kind of time lag involved. This would be the time lag of 2 to 3 years, for example. Okay. So during bad economy, the prices are already very low, right? Let's say very low. And what happens is that with the new delivery of ships, what happens to your supply? It becomes more, because now that there are more ships in the market, so the prices will further drop. Okay, so it will cause the price to further to go down. Okay, so therefore we say that the time lags make booms and recessions, right? In this example, recession even more extreme and cyclical. The third factor will be stock building. Okay. Stock building produces sudden bursts of demand as industry adjusts their stocks to the business cycle. So if we look at during recessions, financially hard-pressed manufacturers will quickly want to clear their stocks. They will want to clear any inventory that they are holding. Okay, so you see that after they have completed clearing their stock, what happens to the demand for maritime transport? Okay, the demand for maritime transport will sharply decline, because now that they have cleared their stock very quickly, there will be no more stock left. and you see a dramatic decrease in the demand for maritime transport because they are not going to export anymore. Okay, so this will cause a very quick decline in the freight rates because of a sharp decrease in the demand for maritime transport. Okay, the same during when the economy starts to recover, the manufacturers will quickly rebuild and ship their stocks to quickly manufacture and export in large quantities. So this sudden burst of demand will increase the demand for sea transport demand. So we'll see a sharp increase in the prices because there is a sharp increase in the demand for maritime transport. Okay, so what happens when they go for a sudden rush to rebuild the stocks? It will cause a sharp increase in demand. Right? So sharp that you see register a very high increase in prices. Okay, and this explains why shipping cycle is so cyclical in nature. Okay, this will be the last internal factor that explains why the economy is cyclical in nature, and that's mass psychology. So you might want to take note that this concept is important and you need to revise about it. So according to the theory of non-compensated error, if people act independently, their errors cancel out. Okay, so here we look at a situation whereby in this economy A, there are 4 people, let's say. Okay, let's say in this economy there are only 4 people, and we look at scenario 1. In scenario 1, let's say the decision to save and spend is random. In that case, this person might save, the next person spend, the next person save, and the next person spend. What do you think would be the outcome of the economy? Okay, because one save, the other spend, their decisions cancel out each other. So the economy will be, I would say, normal, right? Very average. You will have an average economy. In another scenario, let's say everyone save. If everyone save, then the multiplier effect will be very small. Okay, there will be very little spending. If we spend very little, what do you think would be the economic outlook, or the GDP will be very low, right? And number 3, if everyone spend, what happens? Then GDP, expenses, or the economy will be very high. Okay, so if everyone exhibits their spending behavior independently, then we will not have this kind of cyclical behavior. The problem happens when everyone imitate each other's decision, then a particular trend will build up to a level where they will affect the whole economic system. Okay, so hence, if everyone is optimistic about the economy, everyone spend. Right? Everyone spend. And if everyone spend, then it will result in a financial boom. Okay? But if everyone is pessimistic about the economy, then everyone save. If everyone save, then we'll meet a recession. Okay, because and that's very normal in reality. Our decisions are often influenced by each other. If we see other people are saving, we will also save. If we see everyone is spending, we will also spend. Right? So we act in an imitative manner, and as a result, it creates a very cyclical kind of business cycle. So we attempt some review questions together. Which of the following is not a determinant of shipping demand? We learned that there are 5 key determinants of shipping demand. Okay, these two represents the world economy. Okay, so they are determinants of shipping demand. Transport cost is also a demand, which we'll cover later, a factor influencing demand. So the answer is C, fleet productivity. So which of the following is used to measure demand for shipping services? And this was covered earlier. The answer would be ton miles. Right? We measure demand based on ton, representing weight, over distance. Okay. So when shipping goods, we are not from A to B, for example, we are not only concerned with the weight, how much weight. Let's say we want to send 1,000 ton of iron ore to B. So it's not just the weight that matters. We also want to take a look at the distance. In this case, for instance, it's 5 miles. So the total demand of maritime transport generated will be 1,000 tons multiplied by 5 miles, and that will give us 5,000 ton miles. Okay, which of the following about the multiplier effect is false? Okay, it is an effect in which an increase in spending produces an increase in national income, GDP, and consumption greater than the initial amount spent. Okay, so let's say if I spend $1, this would create an amount that is larger than $1, greater than $1. Okay, and the answer would be correct. The multiplier effect is high when the economy is good. That's true, because if the economy is good, everyone will be spending, and therefore the multiplier effect will be much higher. The multiplier effect is low when the economy is good. Economy is good, in that case the multiplier effect should be very high because everyone is spending. So the answer would be C. The multiplier effect explains why the business cycle is cyclical. Yes, that's true, and apart from multiplier effect, there are a few other factors such as time lag, stock building, and also mass psychology. Right. Which of the following explains the theory of non-compensated error? That is, people act independently, their errors cancel out. Okay, so the answer will be mass psychology. So we have now completed the World Economy 1A, which is about the business cycle influencing short-term trend in sea trade. We'll now look at World Economy 1B, whereby we focus on regional development cycles, which determine the medium to long-term trend in sea trade. So here we are splitting the world economy, the world GDP, into different regions. For instance, Southeast Asia or Western Europe. So we are looking at their individual cycles. And it is these regional development cycles that affect the medium to long-term trend in sea trades. Okay, so there are two reasons why over long periods the trade growth of individual regions will change, which means the cycle, the economic cycle of Southeast Asia will be different from the economic cycle of the Western European. So one of the major reasons is because of the economic structure. In other words, the industrial composition, whether it is made up of mainly manufacturing or service-oriented economies. Okay, so of course, if the region focuses a lot on manufacturing, then there will be very high demand for maritime transport services. But if the economy is mainly service-oriented, focusing on tourism or financial or banking, then the demand for maritime transport services will be very low. Okay, so this relates to what we have covered last week when we talk about the maritime dependence factor and also shipping intensity. Is at the last part of your lecture last week. Okay. So here we can compare the trade development cycles of different regions. We are comparing 4 regions: the Western Europe, Southeast Asia, Japan, and China, you'll see that the growth in the demand, okay, here we are trying to measure demand for maritime transport. The growth in demand for maritime transport increased by a lot between 1970 to 1950 for the Western Europe. And that's because they started their industrial revolution very early, and they focused a lot on manufacturing services or manufacturing during this time. And therefore it explains for why there has been a sharp increase in the tons imports of goods. Okay, and in the case of Southeast Asia, we only register a sharp increase after 1990, right? So we started the industrial revolution rather late. And as for China, during this time, after this period, it starts to increase. Okay, so we notice that for Western Europe, there are two phases that contributes to the increase in demand for maritime transport services, but it stagnates after this period, after 2000, because their manufacturing sector is no longer as competitive as other countries such as Southeast Asia and China. And as a result, the economy for the Western Europe has changed from primarily manufacturing to service oriented. And therefore, you see that the demand for maritime transport services has stagnated, whereas for Southeast Asia and China, it continues to grow. Okay, so for Japan, it is very similar with the Western Europe. It started its industrial revolution very early, and then we noted a change or shift in their industrial composition from manufacturing to perhaps more service oriented. So as industrial economies mature, means that they will switch from more manufacturing oriented activities such as construction, stock building of manufacturers. They will switch from these to services, right? Just like in the example of Western Europe and Japan. The first reason being the economic structure, and the second reason due to the depletion of local resources. Okay. So when domestic raw materials are depleted, users turn to foreign suppliers, and this will boost trade. If it boosts trade, it will affect the demand for maritime transport services, because maritime transport services is a derived demand from trade. For example, iron ore for the European steel industry during 1960s. So before 1960s, the European steel market, they very much rely on their own country's raw materials. And after 1960, because there has been a huge increase in the production of steel, the European market is also importing steel or importing raw material for the production of steel. And this boosts trade and therefore demand for maritime transport services. And the same applies for the crude oil trade in the US market. So previously, US has a lot of oil reserve, but right now they are beginning to import oil from other countries. And this also drives the demand for maritime transport services. Okay. So these are the two factors: ability of local resources to meet local demand, and the economic structure, whether it is primarily manufacturing oriented or service oriented. And that completes the first factor, which is the world economy. Now we'll look at the seaborne commodity trades, which is the second factor influencing demand for maritime transport. Okay, so if you refer back to this figure, we notice that world economy will affect all types of commodity, the demand for all types of commodity, and Now we'll look at specific factors affecting a single type of commodity. Specific factors. Okay, so there are several factors that will affect the demand for or shipping demand for a particular product, and there are seasonality, changes in demand for a particular commodity, changes in the supply of a particular commodity, relocation of processing plant, and changes in shippers' transport policy. So we'll start with the first one, seasonality. Some commodity is affected by seasons, especially agricultural products. They are subjected to seasonal variation because of their harvest, the time of their harvest. So these might include grain, sugar, citrus fruits. We can only harvest them during a particular month or period of the year. And only during this period of the year there will be a sharp increase in maritime transport for these products. So one example would be grain exports from the US. So normally the grain exports or demand for the shipping of grain will be at the trough, which means at the bottom during the summer, because that's not the harvest period. And the demand for shipping of the grains will be at its peak or build up during September, because that's where the grain is harvested. So trade may increase by as much as 50% between September to the end of the year, because that will be during the harvesting period. Okay, the same applies for oil. It's also subjected to seasonality. Okay, because during the winter period, the demand for maritime transport services for oil will increase because it's cold. We need oil to heat up our house. We consume more oil in general. But during the hot weather, such as hot climates, such as spring and summer, we consume less. If we consume less, then the demand for maritime transport for oil will decrease. Okay, so these are two examples, grain exports and oil, are two commodities that are affected by seasons or seasonality. So the next factor will be changes in the demand for a particular commodity. So here we are looking at substitutes. Substitutes for a particular commodity. Okay. So if you look at figure 4.4, it shows that the largest commodity traded by sea is crude oil, as what we have covered in our first lecture. The majority of the products being shipped by sea transport is energy products, and the majority of energy is made up of crude oil. Okay, so if you refer to figure 4.4, you'll see that during 1960s, the crude oil demand grew 2 to 3 times. Okay, and that's because during that time oil was cheap. If oil is cheap, then people will be consuming more oil, and therefore there will be more demand for the shipment of crude oil. Okay, the same for Western Europe and Japan. They will switch from coal, which is probably more expensive at that time, to oil as their primary energy source. Okay, so again, we are trying to measure the demand, and this is based on time. You see that there has been a sharp increase in the demand for shipping crude oil, okay, during this period. Okay, however, there has been an increase in oil price during the 1970s. Okay, so this causes crude oil, the demand for shipping crude oil, to first stagnate and then decline. Okay, notice that it starts to stagnate and then decline, right, because of the increase in oil prices. Okay. The third factor would be changes in the supply for a particular commodity. So we have talked about the demand, because it is possible for markets to substitute their consumption by choosing other products. by adjusting to changes in price of the commodity. So now we look at the supply. Oil trade also provides a good illustration of the importance of changes in supply sources. Okay, so in the 1960s, the main source of crude oil was from the Middle East. So Middle East will supply oil to, let's say, to Asia, to Europe, and also to the US. Okay, so that's during 1960s. But in the 1970s, new oil reserves are found. For example, in the Europe, we have the North Sea. So new sources is found. And also in Alaska, new oil is found. So what happens is that instead of now Middle East supplying oil to Asia, Europe, and US, now European countries will use oil supplied by North Sea because the source is closer to Europe. And US will also start to import oil from Alaska because the distance is shorter, the source is nearer to US. And how would that affect the overall demand for maritime transport services in the 1970s? What would you expect the demand to be in the 1970s as compared to the 1960s? Obviously, it will. The demand for maritime transport will be much smaller, or it will decline. Right? It will decline because remember we measure the demand for maritime transport services based on ton miles, right? And clearly the distance would have shortened by a lot. Okay. Right, so you see we found new oil reserve in Alaska, then it will supply the markets in Canada and US, right, and North Sea. It will supply oil to the neighboring countries. All right, so depletion of local resources will also affect the changes in supply of sources. Okay, so again, depletion of local resources. For example, if you look at China, the imports of Chinese iron ore. So until 1990s, so before 1990s, China relied on its own iron ore for the production of steel. But because the steel industry in China is constantly expanding, it cannot meet the production demand, and therefore China will need to ship in from Brazil and Australia. And as they use new sources, this will increase the demand for maritime transport services for iron ore as they begin to import more iron ore from other countries rather than using iron ore from their own country. So this has resulted in growth of iron ore imports and therefore demand for maritime transport services for iron ore. Right, so the fourth factor has to do with the relocation of processing plant, which will change the trade pattern. Okay, so here the relocation of the processing of industrial raw materials can affect the volume of cargo ship, which will affect the demand for maritime transport services, and also the type of ships required. Okay, so here we'll take the example of the aluminium industry. So to produce 1 ton of alumina, we need 3 tons of bauxite. Right? 3 tons to get just 1 ton of alumina, and we need 2 tons of alumina to produce 1 ton of aluminium. So 2, 2, 1. Okay, so let's assume that we have a country A, it ships, let's say 6 tons, right? 6 tons of bauxite. Okay, 6 tons of bauxite to B. Okay, so B will be the country that processed the bauxite to aluminium. Okay. So versus another scenario whereby now A begins to process the bauxite. So instead of shipping bauxite, it is shipping 1 ton of aluminium to B. Okay, so you need 6 tons of bauxite to produce 1 ton of aluminium. So what do you notice here if you compare both scenarios? A will be the country now processing the production or the conversion of bauxite to aluminium. So first you notice that there has been a sharp decrease in the volume of cargo from 6 tons to 1. So that will affect negatively the demand for maritime transport services for the aluminium industry because of the relocation of processing plant. And it will also affect the ship types because in the past, you probably need larger ships to carry larger amounts of bauxite. Now you need smaller ships to ship the aluminium. So it also affects the type of ships required. Okay, so this is another example that you can look into when you have the time. Okay. All right. So here's another example whereby it relates to refining crude oil. Okay, so again, if we have a country that ships crude oil, right, crude oil to B versus another country, the same country A now it process all the crude oil, it will ship product oil, refined oil, product oil to B. What would be the effect? Okay, so if you look at crude oil, it can be refined into various products. Okay, like butane, petrol, kerosene, diesel, fuel oil, and lubricating oil, paraffin wax, and exfate. You'll notice that if we refine 100 liters of crude oil, we will also get 100 liters of these types of products. So in terms of volume, it's not going to affect the volume of the products being transported, but it will affect the parcel size or the types of ships in general, because now let's say out of these 100 liters we have 20 liters of butane, 20 liters of petrol, and etc. So if you are to ship them independently, you need so previously you only need one ship, right, to transport all these commodity. Now you need a lot more different ships and at smaller sizes, smaller ship sizes to ship these different products. Okay. So the last factor would be changes in shippers' transport policy. Here we are looking at alternative transport modes. Okay. Alternative transport modes. So the best example would be the One Belt, One Road initiative. Okay, so here we can compare shipping some products from China to Duisburg. If we go by ship, which is the only available mode in the past, it's 36 days. But now, I mean, with the construction of the One Belt, One Road initiative, you only need 16 days to ship the products to Duisburg. So some of the exporters in China might be switching from maritime transport to rail transport, and that will negatively affect the maritime transport because of this switch or changes in the shippers' transport policy. Okay, so these are the 5 factors that causes the shipping demand for a particular commodity. So to recap, they are seasonality. Only certain types of products are affected by seasons, especially agricultural products, right? Oil as well. Changes in demand for a particular commodity. So here we're talking about substitutes. Okay, if the prices of oil, crude oil becomes cheap, then there will be more people buying or consuming crude oil, and as a result, the shipping demand for crude oil will be higher. So changes in the supply here, we are looking at the sources of the supply, right? The sources of the supply. For example, we talk about oil as the example, okay, and the import of iron ore in the case of China causes changes in the supply sources. And number 4, relocation of processing plant. We have used the aluminium industry as an example. If we are to relocate the processing plant to its source of production, source of the raw materials, then it's going to negatively affect the demand for maritime transport services. And as for transport policy, we are looking at the alternative transport modes. In particular, their competitiveness, right? So example would be rail, right? Road. These are all different, a few transport modes that could compete with maritime transport. So the third factor will be average haul. Okay. So as mentioned earlier, we measure sea transport demand by ton miles. Okay. So ton miles, basically, how do we get ton miles? It's the tonnage of cargo ship. Here we are talking about the weight multiplied by distance, or in other words, average distance. Okay, so by multiplying these two together, we get ton miles, which reflects the sea transport demand. Okay, so what is average distance or average haul? Average haul of a commodity reflects the average distance. In miles, 1 ton is carried. Okay, so it is the average distance commodities are shipped, and it is computed by dividing ton miles by tons of freight originated. So we'll see in the next example how to calculate average distance. Okay, so for example, if we are to ship a ton, right? A ton, 1 ton of iron ore from South America to China. Okay, so the average haul, okay, the distance that this ton of iron ore will travel will be about several times as much as the demand for sea transport from Australia to China, because it's closer to ship the iron ore from Australia to China. So the average haul will be much lower in this case, versus this case, the average haul will be much higher. Okay, so here's an example on how to calculate average haul. Okay, so for example, in year 2017, there are 3 shipments. Okay, so we have 3 shipments ABC, and this is the weight. Okay, 5 tons, 10 tons, 7 tons, and we also have distance, 20 miles, 80 miles, and 100 miles. So what would be the ton miles? Okay, so we'll just multiply them together. Okay, 5 multiplied by 20, we get 100. 10 multiplied by 80, we get 800. 7 multiplied by 100, we get 700. So what is the total demand for the shipping demand for crude oil? That will be 1,600. This will be the demand. Okay, shipping demand, right, or maritime transport demand, they are the same. Okay, so 1,600. So the formula for calculating average haul will be we take ton miles and divide it by the tons of freight, okay, originated. So we also need to sum the sum of all these weights. Okay, so it will be 5 plus 10 plus 7, it will be 22. Okay, so we take 1,600 divided by 22, that will give us 22.73, which will be the average haul. It's the average distance traveled by 1 ton. 1 ton of crude oil. Okay, so that will be the average distance. Okay, so obviously if the average haul is very high, so will be the demand for maritime transport services. It will also be very high, because now the distance is longer. Okay, if the average haul is short, then the demand for maritime transport services will be very low. Okay, because remember, the demand for maritime transport services is measured by weight and and distance, right? And distance. Okay, so distance here reflects the average haul. So the higher the average haul, the higher will be the demand for maritime transport services. All right. So you notice that the average haul for different commodities changes over time, as shown in this graph, right? So you see that for most products, they increase during this period. And what is the reason behind that? Okay, so the reason is because of the closure of the Suez Canal. Okay, so in the past, if we are to trade between, let's say, the Middle East to Europe, you will need to go through a channel called the Suez Canal. Okay, but because of the closure of the Suez Canal, now the shipments have to go around the Cape of Africa. So this is Africa. Okay, it has to go through, go around Africa and then to the European market. So that increases the distance, the average haul from 6,000 to 11,000. Okay, and what effect will this have on demand or ship demand? It will increase ship demand because of the closure of the Suez Canal. Okay, as shown here, you see that the average haul for most products increase because of the closure of the Suez Canal. And when the Suez Canal opens again, you see that the average haul reduces. Okay, so another example would be the closure of the Dokyo pipeline. So for shipment of oil from Iraq to Turkey is done by pipeline, but because of the Iraq invasion in 1990, so this shipment has to be done by ship. It has to be done by ship. As a result, the demand for shipping services or maritime transport services increases because of the invasion in Kuwait. So we'll no longer be able to use the pipeline and we have to use ships. Okay, and this increases the demand, increases the average haul and therefore the demand. Okay, so the average haul of the commodity trade is influenced by the average quantity of the commodity traded in tons and the distance transported. Okay, so the average quantity of the commodity traded is influenced by the parcel size distribution. Okay, by the parcel size distribution. Okay, but it is not important. Okay, you only need to focus on this, right? The distance transported. Okay, so let's ignore the part A, right? Just focus on part B, the distance transported. Okay, so the distance transported is mainly influenced by the balance between long haul and short haul suppliers. Okay, so I've used that as an example previously. We can use the oil again. Producers of oil. So we have the long haul suppliers and short haul suppliers. So the short haul suppliers of oil will be, for example, Libya, North Africa, North Sea, Mexico, Venezuela, Indonesia. These are countries that have some oil reserves. And because they are closer to principal markets, the main consumers of oil, such as Western Europe, Japan, and United States. So all these countries, we call them the short haul suppliers. Okay, short haul suppliers, because they are closer to the consumption market, right? For example, Libya, North Africa, and the North Sea, they are very close to the Western Europe, so they are the short haul suppliers to Western Europe. Okay, and Indonesia, okay, it's very close to Japan, so Indonesia is the short haul supplier for Japan. And Mexico and Venezuela are very close to the United States, so they are the short haul suppliers to the United States. Okay. So what happens if these principal countries use only short haul suppliers? Then the demand for shipping services for oil will decrease because they are using more short haul suppliers. So if they don't use short haul suppliers, then they have to use long haul suppliers. So long haul supplier, we can consider the Middle East as the long haul supplier. Okay, so if Middle East is to supply oil to Western Europe, US, and Japan, then the average haul will increase by a lot, and therefore the demand for shipping services will also increase. Demand for shipping services for oil will increase. Okay, so the average haul in the oil trade depends upon the balance between the two groups of suppliers, right? So here we look at the supplier for short haul versus supplier for long haul, right? If we use a lot of long haul suppliers, then the demand will increase. Demand for the shipment of oil will increase, and if we use a lot of short haul suppliers, then the demand for shipping services will decrease, because the average haul for short haul suppliers will be much smaller. Okay, so the fourth factor would be random shocks that I have briefly mentioned, like financial crisis, COVID-19, right? Financial crisis example in 2008, 2009, right? All these will upset the stability of the economic system. So some potential candidates will be weather changes, wars, new resources found, commodity price changes. Okay, so they are unique. They happen unexpectedly. All these crises, war, we cannot predict them, right? So they are unique and they will often be very severe. So if there's a random shock, what happens to demand for shipping services? It will have a huge impact on the demand, right? If there is a huge impact on the demand for shipping services, what happened to your prices? It will fall by a huge amount, your freight prices. Okay. So these are specific economic disturbance that we cannot predict or expect, superimposed on the business cycle, right? And often have dramatic effects on prices. Okay, so the last factor would be transport cost. Right? We have learned this formula last week. Okay, so if we are able to reduce transport cost, okay, there will be more countries being able to trade. Right? Example, let's say A to B. The cost of production in B is $2. Cost of production in A is $1. Right? So in that case, if today the transport cost is 150, okay, if it's 150, there will be no trade, because both countries are better off to trade to produce the goods themselves, right? But what happens if we can reduce the transport cost? Now let's say it's just half a dollar, right? In that case, there will be trade, right? It will move from A to B. So transport costs, if we can constantly reduce transport costs, we will be able to encourage more people to trade. And if there are more people trading, what happens to your demand for shipping services? If there are more people trading, demand for shipping services will increase. Okay, so if transport cost decreases, demand will increase. Okay, if transport cost is to increase, what happens? Your demand for maritime transport services will decrease. Okay, so they exhibit a negative relationship. Okay, so we'll skip this section. You just need to understand how these two are related: transport cost and demand. Okay, so we have already learned this. Improved efficiency as we build bigger ships will help us to reduce transport cost. Right? So if you look at the cost of shipping a ton of coal from the Atlantic to Pacific, the cost of shipping has not changed, and this is a result of bigger ships. Okay, so focusing on economies of scale. Right? So here we have two variables. The first variable is the average size of the ships. Okay, so over the years you'll see that the sizes of ships are increasing. And let's take a look at the freight rates now. Okay, so until about 2000, the freight rate has not changed much, right? If we can draw an average line, a trend line, it probably looks like this, right? It hasn't really changed much. It's about, on average, about $12 per ton to ship from Atlantic to Pacific. Okay, so there hasn't been much real change to transport costs, and that is a result of the growth in the ship sizes to help reduce cost. All right, so with that, we'll now attempt the review questions. Which of the following influences regional development cycles? Okay, and hence shipping cycles. There are more than one answer. Okay, so if you look at government spending and government consumer expenses, these are the normal course of business in the GDP equation, right? Government spending plus business investments plus consumers expenditures. So all these are classified under the equation. In that case, these are the business cycle. They affect the short-term shipping cycle. Regional development cycles will be the economic structure as well as resource depletion. These will affect the regional development cycle, and hence shipping cycle in the middle term and long term. So the answer would be A and B. Which of following does not increase the demand of shipping services? Okay, so increase in the average haul of shipments due to changes in supply sources. Yes, if there's an increase in average haul, then there will be an increase in demand for shipping services. Okay. Changes in shippers' transport policy, which favors the use of rail over ships. If shippers are to favor the use of rail, the demand for shipping services will decrease, right? So the answer will be B. Okay. Buyers switch consumption of commodities from short haul to long haul, right? If we switch from short haul to long haul, then the average haul will increase, and if average haul increases, demand for shipping services will also increase. Okay, based on the data below, what is the average haul for the shipment of crude oil? Okay, so remember the formula would be summation ton miles divide by summation tons, right? So here we need to calculate what is ton miles for each shipment. Here it will be 10, this will be 50, right? Just multiply them. Okay, so we need to sum this, it's 60, and we sum this, it's 2. Okay, so the answer will be 60 divided by 2, you'll get a value of 30. That would be the average haul. The demand for shipping services will increase if transport costs reduces, right? So we have mentioned that transport costs and demand are negatively correlated. If this is to decrease, transport cost is to decrease, demand for shipping service will always increase. Right? So the answer will be true. Okay, so we'll skip this question. Question 5, we'll skip this question. It's not really relevant. With that, we have complete our third chapter of lecture. If you have any questions, please feel free to email me, and I will try my best to answer your queries. Thank you.